Today I'm going to tell you everything that you need to know about writing off a home office deduction, including the 2 different methods that the IRS has created in order for you to calculate this tax write-off. Make sure that you stay all the way until the end of this video because I'll be answering a key question from one of my subscribers that you don't want to miss. Without further ado, let's dive in. All right, guys, let's start this off by talking about who is eligible to take the home office deduction. The home office deduction is reserved for self-employed individuals. So if you're an employee, you're not going to be able to take the home office deduction. Bummer. But also, if you're a business owner, you can only claim the home office deduction if there's a place in your home that you use exclusively and regularly for business. This place must also be your principal place of business. It doesn't necessarily have to be an actual office. It could be a bedroom. It could be a portion of your basement. It could be a den or a spare room. It could also be an area of your property that is unattached to your residence, such as a garage, studio, barn, or even a greenhouse. But some people even have home offices in their boats. The important thing is that if you're trying to take a home office deduction, it needs to be your primary place of business before you do anything else. Also, it doesn't matter whether you rent or you own a home. As long as you meet the requirements I just mentioned, you'll be able to claim the home office deduction. Now, I'm going to go over an example of someone who would qualify for a home office deduction and someone who wouldn't qualify for a home office deduction, so listen carefully. Here's the example number 1. John is a freelance consultant in the shipbuilding industry. He is self-employed and primarily works out of an office that he has on the 2nd floor of a garage of his property. The space is his primary place of business and he uses it exclusively and regularly for business. In this case, John would be able to claim the home office deduction for this space. That was easy. Let's talk about home office example number 2. Susie owns a medical billing and scheduling company. She has 3 employees. Susie and her employees work out of an office that she rents in a building downtown most of the time. However, they also work from home about 10% of the time. When Susie works from home, she usually works in the spare bedroom in her house. In this case, Susie would not qualify to claim the home office deduction. This is because her primary place of business would be the office she rents downtown and not her spare bedroom that she occasionally works out of. This is a very difficult situation for many taxpayers because you want to take the home office deduction because you technically live at home. But this is why I encourage business owners to look at the Augusta rule strategy. If you already have a principal place of business, one of the ways in which we can kind of still maximize being at home is taking the Augusta rule. The Augusta rule allows for you to rent your home to your business for up to 14 days, and you can charge a rate for this. I talk about this in this video right here, so be sure to go ahead and click on this if you're interested in the Augusta rule. Now we're going to talk about calculating the home office deduction. The first is the easiest. It's called the simplified method. And I want you to remember that. It's super simple. With the simplified method, you first calculate the square footage of your home office. Then you apply the IRS's standard rate for the home office deduction. In 2025, the standard rate's only $5 per square foot. So in order to calculate the square footage of your home office, you first measure the length and then the width. Once you get both measurements, you multiply them together and voila, you have your home office deduction with the simplified method. So let's say that you have a spare room in your house that you use as a home office and you want to use the simplified method to calculate your home office deduction. So you first measure the length of the room. It comes out to be 10 feet. Then you measure the width of the room. It comes out to be 20 feet. When you multiply these 2 measurements together, you get a total of 200 square feet. Next, you would multiply 200 times the standard rate, which is $5 per square feet, giving you a total of $1,000. So your home office deduction would be $1,000 in this case if you use the simplified method. Keep in mind that if you use the simplified method, you will only be able to deduct a maximum of $1,500 for 2025. That's because there is a limit that the government places on home office deductions for this method. Now let's talk about option 2, the actual expense method. With the actual expense method, which is also known as the regular method, you write off the portion of your home expenses that are attributable to your home office. You also write off any direct expenses associated with running your office that are only used for business purposes. Now, in order to do this correctly, you first have to figure out what percentage of your home that your home office makes up. To do this, you will need multiple numbers. You'll first need the total square footage of your home, then you need to measure the square footage of your office space. Using technique 1 discussed earlier, we can do this. Once you figure out what the percentage of your home is, you can deduct the portion of the home-related expenses, such as rent, utility, and much more. You also deduct the direct expenses. Let's go over an example. Let's say Shauna runs a graphic design business out of her home and she wants to use the actual expense method to calculate her home office deduction. After measuring her office space, she discovers that it's 10% of her home's total square footage. Shauna's home expenses, such as rent, utilities, comes out to $30,000 per year. So Shauna is able to write off 10% of that amount, which is $3,000. Shauna also had $1,000 of direct expenses for her home office, such as office supplies. So she adds these costs to her total home office deduction. Her total home office deduction came out to $4,000. You see, many people prefer the actual expense method because it can lead to a significantly larger home office deduction. It also does not have the $1,500 cap that the simplified method has. However, the actual expense method is trickier to calculate, and as a result, many people make errors when they're trying to calculate their home office deductions using the actual expense method. If you make math errors when using the actual expense method to calculate your home office deduction, then this could potentially lead to an IRS audit. For this reason, it is a good idea to work with a tax professional to help you calculate the measurements correctly and to make sure that you're not doing it over the IRS's reasonable limits. You could potentially trigger an audit by taking too large of a home office deduction. You can trip up the IRS and get a red flag on your tax return by claiming too large of a percentage of your home office to be a home office deduction. For example, if you live in a 1,200 square foot apartment and if you claim 1,000 of the square footage in your home as a home office, guys, this could possibly trigger an audit because the IRS might not consider 80% of your home to be office space. So, don't make your home office extremely large relative to the total square footage of your home. It needs to be reasonable. One mistake that many taxpayers make when it comes to the home office deduction is actually choosing the smaller deduction. For example, they may choose to use the simplified method and get a deduction of $1,500 when they could have used the actual expense method and got a deduction of $4,000 like Shauna did. The only way to know which method will work better for you is to calculate both of them. I highly recommend that you do this if you're somebody that cares about saving money on taxes and you plan on utilizing the home office deduction on your tax returns. Also, if you do use the actual expense method, make sure that you keep track of all of your receipts in case the IRS comes knocking one day. You want to make sure that you have all of the proof of all of the numbers when you calculated your home office deduction backed up by evidence. Now, here's a question that comes over from one of my subscribers. As promised, I will always answer questions from my subscribers. This question came in from Ben Christopher on my Avoid These Mistakes Before Starting an LLC video. The question was, Karlton, is it bad to use personal credit cards if you don't have a business credit card? I've been doing 1099 for many years using a personal credit card, and now I'm about to create an LLC for a new business. All right, here's the answer. Yes, that's bad. If I come and sue you, I can sue your business, and then I can get access to all of your personal assets, your personal IRAs, possibly having you liquidate some of the equity that you have inside of your properties, possibly having you liquidate your 401ks. Why? Because you have not separated your business from yourself. You are co-mingling. You are using a personal credit card for business expenses because you probably think your personal credit card gives you better points than setting up a business Amex or a business Chase card. I've seen so many business owners do this. This is a mistake that you make as a business owner. It is co-mingling your expenses. The IRS hates when business owners do this, and they will come after you hard on you if you're in an audit because of situations like this. This is where they'll start to say, you know what, I'm disallowing this expense. I'm disallowing this expense. Why? Because you used your personal credit card. How do I know it's actually for business? Because you told me it's for business? This is where you're getting into a he say, she say situation with the IRS. And guess what? You are guilty until proven innocent with the IRS, not innocent until proven guilty. My name is Karlton Dennis. You know what to do. Like, comment, subscribe. I look forward to seeing you on the next video. Cheers.